Welcome, G3 investors. We're going to look at week 9. The first week, March, ended on March the 4th. Well, Russia-Ukraine crisis concerned the market all week. Oil prices started out the week around $100 a barrel, and they ended up at $115 a barrel. You can see here that the NASDAQ lost 1.7% on Friday, 3.2% for the month and the week. That's the difference because of the one day, but the S&P did a little bit better, but not much. And then the Russell was about the same. If you look at it, we're still in a correction mode. The NASDAQ is 14%, almost 15% off its January high, and almost 18% off its all-time high. The S&P is down 10%. The Russell's down 18.6%. Year to date, the NASDAQ is, the S&P is down 9%. How are we doing? Well, we're doing really good. It's hard to argue with a 32% gain, and we're only good through March 4th. My goal is to double the portfolio every year, but we're well on our way to that. And for the month, we've made 3.9%. So we're absolutely crushing our benchmark of the S&P 500 and the NASDAQ, both on a year-to-date basis and for the month. 65% of our gains have come from short side trading. So I'm going to add in another short trade or ETF that we're going to follow, the DXD, which is the double of the Dow Jones Industrial. I'm replacing one of our ETFs that hasn't had very much activity this year with that. If you're interested in this, updates like this and how we trade on a daily basis, just enter that into your browser and sign up, become a G3 patron. So let's take a look at the market. This is a 6-month chart of the NASDAQ Composite Index, and you can see from this high where we, like this is a big green bar, a big reversal bar here. So the market really is trying to ignore what's going on in the world and everywhere else and rally off of this bottom, but it just can't seem to get going. It makes a little bit of progress and then it falls back again. So we actually trade the QQQ, which is an Invesco 100 Trust Series, the Q100, and it's very similar. Again, we're looking at the same chart. Obviously, we'd take a position at 351 here, but the important thing is last week I think we had 6 of the ETFs we follow that have had what's referred to as the black cross or the death cross, where the red line, which is the 50-day moving average, crosses under the blue line, which is the 200-day moving average on this chart. And we had that cross this week on the QQQ. Now we had a couple others, so now we went from 6 to 9 of our ETFs have crossed over. There's another one, the home builders. See, again, you can see the same, what I consider the death cross. And then IWF, which is kind of amazes me because the Russell 1000, which we trade, usually holds up a lot better. And it does hold up a lot better. If we look at the IWM, which is the Russell 2000, you can see it had its death cross back here in January. So there's a lot of weakness out there, but we're making money on the short side, and that's more or less trading. We don't hold those overnight, so we trade those on a daily basis, and I don't like that because it takes a lot of time and energy, but it's really worth it for us because we made $80,000, 65% or 65% of our gains this year from it. So we do that. There is, however, some strength in the market, and we do have 3 open positions, so let's take a look at that. The first one is the energy sector. And you can see the red line is above the blue line for the last 6 months here. And you can clearly see this. So we've made some good money on this ETF this year, and we do have an open position with a nice gain. I think month to date we're up $1,100, and year to date we made it four grand on this one trade, and as a percentage of that trade, it's about 12% gain from that. So we're doing pretty good on energy. XME, and that's the metals and mining ETF from the Spider. Again, nice move here. We took a position at 53. I don't know what I did. I got stopped out on this. We've made money on this one. This current move is about $4,200, but the entire move here for the month or for year to date, we've made almost 9 grand, or 24% on this ETF. So it's been a good long side ETF for us. Another position that we have is USO, and that is the United States Oil Fund, which basically is we're trading the price of oil. And again, here we've made about 16% on this move. We got stopped out here on this big fake out, and then we got right back in, and right now we're up, I don't know, $1,400 on this little position right here. But for the month we've made about 3 grand, and then year to date we made double that. We have had some success with silver this year, and it's really, you can see the red line has lived below the blue line over the last 6 months, but it's really trying to get to move higher here. So we have made some money on that one. We're up about 9% on this move here. And then we've got UNG, which is natural gas. Again, we trade that usually in the winter time, and it doesn't look like much movement here, but we've made about 28% on this move here, and then we got out, and then we got back in here, and then we made a little bit. We don't have a position right now, but we would be interested in getting in it at 1750. Well, that's about all I had on the charting that I wanted to look at. That's not much that's strong in the market. I do want to take a 1 week peek at the heat map. This is the chart of the S&P 500. This is from FinViz. It's a financial services. This part is free. You can become a member of it. They have all kinds of stuff, futures, forex, crypto, everything you can think of. They have it. But I really like looking at their heat map over time, because it tells us where the market's moving and what's not. And you can see healthcare. We did have a position in healthcare. I didn't go over that, but we did. We don't have it now, but we did. But there you can see the energy. And, the banks have took it on the chin. And the big glams have been pulling back. Semiconductors have been pulling back. So it's a market that's trying to go higher. The other thing that was kind of a surprise to me, but Fed Chairman Powell came out on Wednesday discussing their beige book or whatever it was. But basically he signaled pretty clearly that they're going to do a rate hike in March, and that kind of surprised me given the Russia-Ukraine crisis that's going on. I thought they'd have an excuse not to raise rates, but if Powell's a man of his word, I think they may be raising rates 1/4 point sometime this month. Well, that's all for me. This is Greg Gallagher with G3 Investors. Good trading and good luck.